In this section, we're going to talk about the chart of accounts. My name is Julia Shanks. I'm a recovering chef and the author of The Farmer's Office. I'm also a QuickBooks Certified Pro Advisor. I run a website called The Farmer's Office Online, and we offer videos and one-on-one coaching, tutorials on how to be financially sustainable with your farm business. We're going to talk about it in two different ways. First, we're going to cover the framework behind the chart of accounts so you can understand how I recommend to set things up. And then we're going to get into the mechanics of actually setting up your chart of accounts. What do you actually do when you get into your QuickBooks file? So let's start with the framework. One of the key principles of bookkeeping that we've covered in previous videos is that everything has a bucket. When you have a transaction, you want to sort all of your transactions into different buckets or shoeboxes. You may have a shoebox for fuel expenses or insurance. You may have a shoebox or a file for seeds and seedlings. And the same is true when we do our bookkeeping system. When we set up our bookkeeping system, we want to have a bucket for all the different transactions that we have. And these buckets are the chart of accounts. It's a structure by which we're going to organize all of our receipts and all of our expenses and revenue and transactions. These buckets and the chart of accounts have categories that are either going to be on the income statement or the balance sheet. So as we select the type of buckets, how we name our buckets, we want to determine, do we want these categories to be on the income statement or on the balance sheet? So things that are income and expenses, cost of goods sold, those are going to be on the income statement. Things like assets or bank accounts, credit cards, and accounts receivables, those are going to be on the balance sheet. And how you organize your buckets, how you organize your chart of accounts shapes the story of your business. So what story do you want to tell? Are you spinning your wheels or are you building equity? Here's an example of purchasing a new greenhouse. So let's say you have revenues of $100,000, you purchase a greenhouse for $15,000, and all of your other expenses are $60,000. Now, if you categorize the greenhouse as an expense, you're going to show a net profit of $25,000 and no assets. If you categorize the greenhouse as an asset, you're going to show a net profit of $40,000 and total assets of $15,000. Very different stories just by how we categorize the transaction of purchasing a greenhouse. The chart of accounts is the backbone of your QuickBooks, and it's going to determine how your reports are going to look. So you want to organize your chart of accounts in a way that makes sense for you and your business. You want to create categories that make sense to you. You want to name them in a way that's meaningful to you. And you want to group things together so that when you run reports, you can get the most meaningful information. Now, before I go through what I recommend, I want to share with you some ideas on why I don't recommend certain things. This is what I call the Schedule F income statement. And this Schedule F income statement is organized in a way to make it the most easy to file your taxes. So all the expense categories line up perfectly with the Schedule F tax filing. Now, it's very simple to look at. It's easy to read. It's alphabetical, very short and compact, but we lose a lot of nuance and information by doing it this way. Challenge number one is that grants are included with revenue. And one of the ways that we really understand our expenses and how we're doing is that we look at expenses as a percentage of income. So for example, if we want to see how much did we spend on feed and we look at it as a percentage of income, it looks like we rocked it in 2016 with only 5% of our income going towards feed expense. But really, part of that income was grant. So we have to pull that out to really see a comparative analysis of how we did year over year over year in our expense of feed. Certainly not hard math to pull it out, but you want to be able to get a quick snapshot when you read your reports. The second challenge is that the expenses are not aligned to your business reality. Going back to the cost of animals, we have feed F, which is up at the top. We have V for veterinary down at the bottom. So if we want to know the direct costs of animals, we need to start, pulling out our calculator and adding things up. Not hard math, but we want to group these together so we can get a quick snapshot of what our cost of animals are. Also, things are grouped together, not necessarily in meaningful ways. Insurance, is that liability insurance, which is general overhead, vehicle insurance, which is part of the cost of our equipment, or is it workers' comp or disability insurance, which is part of the cost of having employees? Very different types of expenses that we're going to analyze about our business very differently. Similarly, with taxes, is it payroll taxes, which is the cost of employees, property tax, which is the cost of being on the land, or income tax, which is you had profit, which is awesome. Yay, you. So I want you to rethink how you organize your categories. The old thinking would be to group insurance together or group supplies together, but we don't necessarily see your cost of production because things get broken out in odd ways. I want you to think about things in terms of meaningful categories such as production costs, payroll costs, and general and admin costs, and group things according to ways that are going to make sense to you and help you analyze the health of your business. So I talk about organizing the income statement in a way that you can extract meaning. So at the top, we have revenue, we have gross sales. What are you in the business of doing, whether it's selling tomatoes or chicken or meat or honey or flowers? What did you do in your primary business? Then we have our cost of goods sold, which traditionally is things that you purchase for resale. I know a lot of farmers like to put their cost of production under the cost of goods sold, and that's certainly an option, and I don't want to discourage that. It can get a little bit tricky just because the cost of production has a very ill-defined boundary. As an example, you may have an employee that works in the field producing and goes to the farmer's market selling. So how do you break up their labor into cost of production versus sales and marketing? But if you want to put cost of production under cost of goods sold, absolutely do it. The next section is the gross profit, which is revenue minus cost of goods sold. And the gross profit shows you what you have left over for everything else. The next section is operating expenses, and I like to group operating expenses into 6 categories of direct operating, labor, occupancy, general and admin, repairs and maintenance, and one-time expenses. And I'll talk more about those groupings in a few moments. Then we have the operating income, which is revenue minus cost of goods sold minus expenses. And then below the line, if you ever hear a bottom line or below the line, the other income and expenses are below the line. And these are things that happen in your business, but are not necessarily your core business, whether you get grants or loans. You're not in the business of getting grants and loans, but you need to put them on your income statement if you're paying interest or receiving funds from a grant, and likewise depreciation. And your bottom line is your net income, which is operating income plus or minus other income and expenses. And by organizing it this way, we can see number 1 is your core operation profitable. We've put all of your operating revenue and expenses above the line. And below the line, we have all the transactions associated with debt and capital improvements. So we can see, can you afford the debt that you have, and can you afford your capital improvements? Is something else driving your profit or loss? And with that in mind, we can use that structure to set up our chart of accounts and how we see our income statement. So in the chart of accounts, you're going to have the name and the type. So you're going to have the list of the different account categories, what it is, and these are the things that you're going to see on the income statement when you run that report. And the type, whether it's expense, fixed asset, or income, is going to tell you where it is. An expense is going to be on the income statement in a certain section. A fixed asset is going to be on the balance sheet in a certain section. So the name is what it is, the type is where it is. Now, if you're using the QuickBooks online version, you'll have the name and the type. You'll also have a third categorization called detail type. Now, I'm not really sure what this is for, I got to be honest with you. I'm told that it's going to be some feature coming down the line, but don't get distracted by the detail type, that third column. You really want to focus on the name and the type, what it is and where it is. So these are the types of accounts that QuickBooks gives to you. On the income statement, the account types are income, expenses, cost of goods sold, other income, and other expenses. On the balance sheet, the account types are fixed assets, bank, loan, and so on. You can read this list. And I share with you where these are on the balance sheet, whether they're assets or liabilities, because sometimes it can be a little confusing that a bank account is an asset and a credit card is a liability. So it may be a little bit confusing to not see liability or assets in some of these account types. So when you set up your chart of accounts and think about where you want things to show up on your income statement, anything with the account type of income is going to show up in this top revenue section. Anything with an account type of cost of goods sold is going to show up in this section below revenue and above gross profit. Things with an account type of expenses is going to show up in the operating expenses section. Things with an account type of other income or other expenses are going to show up below the line between operating income and net income. So setting your account type is going to determine exactly how your income statement is going to look. Now, there isn't any right way to do this in terms of setting up your chart of accounts. I recommend certain parent categories, which we'll talk about in a few moments, and kitchen table consultants who are good friends. They have another way of doing it, and we have lively conversations over wine and bourbon, how to set up the chart of accounts. There's no one right way, and you need to set yours up in a way that's going to make the most sense for you so that you can get the information you need about your business. So when you create your chart of accounts, you're going to want to think about the structure for both the revenue and the expenses. In terms of revenue, you want to think about revenue categories for either sales channels or for products. So sales channels being farmers market, farm stand, wholesale, retail. Your products are beef, vegetable, dairy, honey, and so on. And the reason why you have to choose one or the other is that there's so much overlap that you're going to get a mess if you don't pick one or the other. As an example, if you sell at the farmer's market, you sell vegetables and flowers and some chicken, do you categorize it by the products or do you categorize it by the farmer's market, the sales channel? So I generally recommend that you set up your revenue categories by sales channel and use classes for the products. And you can watch the video on classes to see more details about how to set that up. If you only have one sales channel, then you may want to just set up your income categories according to your products. But generally speaking, I do recommend setting it up by your sales channel. In terms of your expenses, you want to set up parent categories, such as cost of goods sold, direct operating, and then children categories. So things that are going to be nested underneath the parent categories. So these are the parent categories that I recommend. And some of the sample accounts that might go underneath the parent categories are things like seeds and seedlings, soil amendments, and so on. These might be sub-accounts or children of direct operating. For labor, you would have that as a parent category, and your sub-accounts might be salaries and wages, payroll taxes, disability insurance, and so on. For general and admin, the parent category, you might have liability insurance, professional fees, website expense, telephone expense, and office supplies. The balance sheet also goes by the same structure in the sense that the account type determines where things will show up. So an account type of a bank is going to show up at the top section of the assets. Then you're going to have other current assets, other assets, and fixed assets. In the liability sections, you'll have the accounts payable and credit cards, which are both auto-created. If you have them, the QuickBooks will manage those for you. You may also have a line of credit, which would be an other current liability or long-term liabilities. And then you have the equity section. You can put your owner's investment in the business as an equity or owner's draw. And then retained earnings and net income are both auto-created, and that is keeping a running tally of how much profits you've had in your business over time. Now, as I record this video today, I know that QuickBooks is changing how they call things. So what I'm calling retained earnings may be owner's equity. They change things every once in a while to try and make it more helpful and more clear to the user. But this constant changing can sometimes actually be a little bit confusing. But I wanted you to recognize that retained earnings may or may not show up in your version of QuickBooks. In the next section, we're going to talk about the mechanics of setting up your chart of accounts. So continue on. Thank you very much for joining us. My name is Julia Shanks, and feel free to check out more resources on our website, thefarmersoffice.com.